Time now for an in-depth look at the market news, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, the Bank of Korea is starting to release some of the dollars from the U.S. currency swap. It's auctioned off around $8.7 billion. These banks will get their dollars on Thursday. What effect do you think this will have on the exchange rate?
Yes, as you said, Bank of Korea has injected into the banks Tuesday in its first round of dollar lending using the currency swap line with the United States Federal Reserve in a bid to stabilize the currency market. If you look at the currency movement, it did depreciate very rapidly to 1280 range due to the COVID-19 issues, but has improved quite significantly since then due to the currency swap. Now we are looking at 1220 level of Korean won to US dollar range. The Bank of Korea officials said that the dollar supply will stabilize the currency market, and the central bank will auction off more dollars considering the current market situation in the future. We think that the range bound should be happening. On the economic fundamental basis, we think that the currency should be in a range between 1180 to 1240 because of the economic conditions. Global economic growth rate versus Korea, people are saying that it will slow down significantly, but the level of decline should be relatively less for Korea because of its skewedness towards the DRAM part and the export related to this. And also the domestic consumption reduction, it seems to be fairly stable because of the how we are attacking the COVID-19 issues. And that seems to be fairly reasonably well conditioned. So therefore, Korea's growth rate will slow down, but probably to the -1% territories. If that is the truth, then the currency should be fairly stable at around 1200 range.
Interesting. Well, with all the stimulus countries are doing, including Korea, the financial markets seem to be settling down a bit. The Dow was up Monday by around 3.2%. What's the story in the stock markets today?
Right. I mean, if I go over all the boosting measures, it will take forever because there's so many announcements that's happening from all the countries. If you look at U.S., you're talking about liquidity injections, the interest rate cuts, the fiscal stimulus. Eurozones are announcing all kinds of boosting measures. Also, Canada, United Kingdom, Japan, China. They will be coming out with in the April 18th of the meetings. All these are amounting to the size of more than GDP of 10%. United States clearly over 10%. Germany, we're looking at 32%. Japan is looking at 10%. UK is looking at 19%. Australia looking at 10%. Malaysia 18%. Singapore 11%. China, we don't know yet, but estimating to be somewhere between 30 to 50% of GDP. So we're looking at ridiculous numbers of the boosting measures. Clearly, these measures should able to stabilize the market for now. Clearly, the key question is whether or not COVID-19 issue will be diminished and that third quarter recovery of economic growth it can happen or not. If it does, then you will look into a very strong rally of the equity market in the third quarter. If not, then of course the volatility should continue in the future despite all these boosting measures. In any case, the level of the boosting measure is the record high level that we never seen in the history of financial market.
Indeed. Well, stocks are up, but oil prices down by a fair bit on Monday. West Texas Intermediate by 6.6% to its lowest in 18 years. That's since 2002. So is it going to go right down into the teens?
Well, if you really think about this oil price war, it is two issues. One is, yes, it is a lack of demand because of the COVID-19, that the airplanes not flying, the automobiles are not moving, and all that is resulting into a significant drop of demand for oil. But as we just said, if third quarter recovery does happen, then demand should be coming back very rapidly. The question is though, supply side. We all know that the U.S. supply have been rising rapidly, and U.S. have become the exporter of oil in recent days. And clearly, this is not making Saudi Arabia or Russia happy. Clearly, because of that, they have decided to kill the shale gas company of U.S. by providing more supply into the market. Clearly, they are actually looking into bleed due to the additional supply, but by trying to result into shale gas consolidation. Clearly, U.S. production of the oil should be declining. We have seen the first time of announcement by these shale gas companies and U.S. oil maker producers are talking about actual reduction of productions. If that is happening, then clearly what Saudi Arabia and Russia were looking for is actually happening. If that happens, then they will cut the productions. So we're looking at basically a chicken game between these three major players of Saudi Arabia, Russia, and U.S. We do think that they will come to some kind of agreement. Once that happens, then that is when you will see oil price rapidly rising well above $35 from current $20 level.
All right, we'll keep an eye on that to be sure. Thank you, Mr. Yu, for sharing your insights today.
Thank you very much.